Hello, and welcome to CMS Forex News. This is Alexander Shapiro, and today is May 21st, 2008. In Australia, the WMI Consumer Sentiment Index increased 2.7% to 89.8 for May. Consumers were heartened by the government's promised income tax cut, a stronger stock market, and a resilient labor force. It's the first improvement in the index since December. In May, the German IFO Business Confidence Index improved to 103.5, with both current conditions and expectations increasing. It comes in contrast to yesterday's lower investor confidence data. Today's reports show that businesses are coping with the surge in oil prices and the strong euro, and helped ease the need for the ECB to lower rates. Yesterday, the euro gained on inflation expectations and rising oil. Today, oil continued climbing, breaking above $130 a barrel in electronic trading. Combined with the business confidence report, the euro-dollar pair saw a 150 pip surge from its overnight low. It is now at a 4-week high and is approaching 1.58. The FOMC minutes at 2 p.m. Eastern Time showed the Fed is ready to stay on the sidelines. The news did little to help the dollar, while it sent the U.S. stock markets reeling. At 3 p.m. Eastern Time, the Dow Jones Industrial Average was down 250 points. In Switzerland, the ZEW Expectations Index improved for May, as fewer respondents saw the Swiss economy continuing to deteriorate. Half of respondents see inflation continuing to rise. However, the majority believes that interest rates will see no change, even as more analysts speculate short-term interest rate increases, such as those for credit cards. The Bank of England minutes showed that policymakers voted 8-1 to keep interest rates steady. A rate cut would send the signal that the bank was trying to stabilize growth rather than maintain its focus on the inflation target. Some believe growth has to slow for inflation to cool. The pound-Swiss franc pair fell steeply overnight, breaking through support at 2.04. The swing from its open to today's low amounted to around 200 pips, with the pair finding support just below 2.02. The better-than-expected Swiss ZEW report acted to bolster the franc, while the dovish Bank of England minutes weakened the pound. The Swiss franc advanced to the highest level in almost a month against the dollar. The dollar-franc pair has swung 280 pips from its high on Monday. Today, it found support near 1.0275. During a time of dollar weakness, the pound-dollar pair was one of the few currency pairs to go in the greenback's favor. Overnight, the dollar paired some of its losses from yesterday, but it eventually fell victim to weakness during New York trading. Consumer prices in Canada surged above expectations in April. The monthly figure for all items doubled expectations, rising 0.8%, while annual prices accelerated to a rate of 1.7%. Core prices were up as well, increasing 0.3% on the month and 1.5% on the year, both above expectations. The report cites higher gasoline prices and less downward pressure from passenger vehicle prices as the main culprits. Similarly to the U.S., the Canadian economy's leading indicators index showed a 0.1% improvement in April. Only 3 components of the index declined. The main positive contributors were stock prices and household demand, while a fall in the housing starts was the main negative drag on the index. Following the report, the U.S. dollar-Canadian dollar pair fell to the lowest level in more than 2 months, near 0.982. The inflation data makes it less likely the Bank of Canada will cut rates in its June meeting, helping to strengthen the Loonie. Surging oil prices are also a major factor supporting the Canadian dollar. Tonight, Japan will reveal its all-industrial activity index and trade balance. Overnight, the UK will post data on business investments, retail sales, and manufacturing. Also overnight, the Eurozone will release data on industrial new orders. Tomorrow, Canada will post its retail sales, and the U.S. will reveal weekly jobless claim numbers and its housing price index. That wraps it up for today. Join us again tomorrow, right here at cmsfx.com.